if you are preparing for the March 2025 ACCA UK taxation, then this video is for you. So what I want to do is to solve with you two questions of the ACCA exams. So they are objective text questions of the ACCA. So the first question has to do with the requirement that says what amount of lifetime inheritance tax would have been payable in respect of Jane's gift to the trust. So that's the first thing, and that is what I will expect you to do on the day of the exam, which is to read the requirements of the question first. So we know from the word go that it is the lifetime inheritance tax that we're looking for. Okay, good. And for the second question, is saying here, that's the requirement. The requirement of the second question is asking us that for each of the gifts listed below, click in the box to indicate whether the gift will be exempt or not exempt from inheritance tax under the small gifts exemption. So whoever is going to do well regarding the second question, which is question number 9 here, that person must know the rules of small gift exemption under inheritance tax. Okay, so first thing first, I'd like to start with the first question, but then I've gotten some rules that I will need you to follow. So the first one says that to pass the tax exams, you must have a strong understanding of the relevant tax rules and their practical applications. Yes, that's very correct, because without the knowledge and the application of these rules, I'm afraid there is little or nothing you can do. If this type of question comes out for you, so please, you must have the understanding, and not just the understanding. The understanding must be a strong one. All right, moving on to the second point. A gift to a trust is classified as a chargeable lifetime transfer, CLT. So in the exam, if you are told that a gift has been made to a trust, please, I need you to know that such a gift is classified as a CLT, chargeable lifetime transfer. For that gift, a gift made to a daughter, to a son, that's going to be a pet. Okay, moving on. So this other point says if the lifetime inheritance tax, which is IHC, is paid by the donor, the applicable tax rate is 25%. So what is this saying? So if you have a chargeable lifetime transfer, a gift made to a trust, meaning that the trust is going to have the custody of the gift first before the gift is passed on to the beneficiary. Okay, so during the lifetime of the donor, the inheritance tax could be paid by the donor or by the trust. So if the tax is paid by the trust, the rate of tax is going to be 20%. However, if it's going to be paid by the donor, then the rate of tax during lifetime, the rate of tax will be 25%. Okay, moving on. When the donor pays the lifetime inheritance tax, the value of the gift must be grossed up. So I'll be explaining what that means to you when we are dissecting the question. So grossing up applies only during the donor's lifetime and is not required upon death. Yes, that's another point that you need to be clear about. Next is the normal NIRE band of £325,000 is available provided the donor has not made any chargeable gift within the 7 years preceding the current gift. So there is this rule of 7 years, and it's one of the things that you sure have to understand. It's one of the principles that you sure have to understand if you are going to do well in these exams. So another pointer says an annual exemption of £3,000 is available for the current tax year. If the previous year's annual exemption was not used, it can be carried forward 1 year, but the current tax year's exemption must be used first. All right. This other point says that if a question states after deducting all available exemptions, so what's that saying? Now, if the examiner has put this in the body of the question or somewhere in the body of the question, and that says after deducting all available exemption, so all available exemptions. So what is this saying? Well, it's saying that, or it means that all relevant exemptions have already been applied to determine the value of the gift. So this exemption, the exemptions will include exemptions such as HANA exemption, marriage exemption, normal expenditure of income exemption, small gift exemption. We also have a spouse exemption. Okay, but there's another thing I need you to know, which is the new rate band of 325,000. So in a tax year, especially going by the Finance Act 2023, so you have £325,000. And this £325,000 is available only when we are calculating or determining the amount of inheritance tax payable. So it means that when you are told that after deducting all available exemptions, the new rate band allowance has not been enjoyed. Please, this is very important because exemptions will be different from the new rate band allowance. So when do you enjoy the new rate band allowance? Is at the point of calculating the amount of inheritance tax payable. So please, is one of the things that I need you to take note of. All right. So at this point, I would like us to go straight to the question. Let's dive in and get the solutions to those two questions. But I need to tell you how to reach me in case this video is useful to you. If you have considered it to be useful, my name is Ayorinde Temitokwe, and you can reach me on WhatsApp. So I have the number to be 234. That's plus 234 3385 1555. And the email address is ironidett5097 @gmail.com. Okay, so again, if you have found this video useful, please subscribe to my channel, like, follow and leave a comment. This way, you'll be among the first to see my next video when I post. Thank you. So we want to have a look at all those questions. The first one, I'm going to copy it and take it to where I'm going to be having the flexibility of dissecting the question with you. So here, let's just put it here. So I have the question here for you. Okay, so the gift here is talking about trust. So you can see the word trust here, meaning that it's not a pet. So a distinction now. So if I have a timeline for you, this timeline, and somewhere here, if I put down the word donor, so donor, and somewhere here I've put down donee. So who is a donor and who is a donee? So the donor is the person making out the gift. If you like, the donor is the giver of this item of gift that we're talking about. So you have the donor to be the giver, whereas the donee is going to be the person receiving the gift. So we have giver and receiver. So that point is very, very important. Okay, so if a gift is going from the donor directly to the donee, and the same donee happens to be the beneficiary, then this type of gift is referred to as a pet. So it means this is going to be a pet. What's the full meaning of pet? Pet is potentially exempt transfer. Okay, so if the donee is the same thing as the beneficiary, so it means the gift we are talking about is going to be a pet, potentially exempt transfer. But then I have another, so let me have another straight line for you. So if I have another straight line, and this time around, I'm going to modify the timeline. So if I have somewhere here, so let's look at it. I have the donor here. If I have the beneficiary here, that's the beneficiary of the gift. And I have the donee here. So this is different. So it means the gifts will not go to the beneficiary directly, unlike the first timeline. So consider a situation where a man who has a luxury car, and then this man is very old. Imagine the man is of 90 years, and this luxury car, he would rather want his youngest son to inherit the car after he must have passed on. Okay, so what the man could do is to first put this luxury car into an arrangement where someone referred to as the trust will first have the custody of this car, and the car will later be passed on to the son. Well, the reason might be that at the moment the son has not attained the age of driving, and the man is thinking death could come at any time. So let this car be in the custody of the trust, and later the beneficiary, the son, could have the car after attaining the age of driving. Okay, so all I'm trying to explain to you at this point is, if in a question you see the word trust, just know that that is something that has to do with your CLT. The gift has to do with CLT. But if you cannot find trust in the question, and the question happens to be an inheritance tax question, so just know that such a gift is going to be pets. So we have pets, we have CLT, and the third thing that inheritance tax covers is death estate. So three things: we have pets, we have CLT, and we have death estate. So that estate is just talking about the will that the deceased must have prepared. So these are the three things that you sure have to understand regarding inheritance tax questions, or the topic of inheritance tax, if you like. All right. So the first question then, which happens to be question number 8 in this arrangement. So I've gotten 2 questions there, and please remember the questions, they are ACCA questions. Okay, so I'm going to copy this. That's the first question, and take it to where I'm going to be having the flexibility of explaining this to you. So it says remember, we're looking for the amount of tax payable. So on 14th November 2023, so you need to know that that date has a tax year of 2023-24. Okay, and in case you are struggling with this, how to trace a date to a tax, I have a YouTube video on this, so please do well to check that out. So in that particular video, I explained to you, or I explained in there, how you could trace a date to its tax year. So going back to the question, on 14th November 2023, Jay made a cash gift to a trust, and the value of this gift is £800,000. Okay, this is one of the things that I was talking to you about in the note. So it says that this £800,000 is after deducting all available exemptions. Okay, so what's that telling us? So this is saying that all the exemptions, such as small gifts exemption, marriage exemptions, expenditure, non-expenditure of income, and all of that, all of this, they've been deducted. However, it doesn't mean that the NIRE band of 325,000 has been deducted. So please take note of that. Okay. So we have the value to be £800,000. And here we've been told that Jane, that's the donor, paid the inheritance tax arising from this gift. Okay. Now, Jane has not made any other lifetime gifts. Okay. So what is that part telling us? So from the date of the gift, which is 14th November 2023. If you go back 7 years, now it means Jane did not make any gift before this date, which is 14th November 2023. What's the implication of that? Well, if you ask me, that's good news, because it means the first 325,000 out of the 800,000, which is the value of the gift, can enjoy the nil rate band allowance, meaning that the first 325,000 pounds will not give rise to inheritance tax. Is the remainder that will give rise to inheritance tax. So you see why it is good news. All right. And it's saying that what amount of lifetime inheritance tax will have been payable in respect of Jane's gifts to the trust. So if this is to the trust, that means what we have here is CLT, chargeable lifetime transfer. Okay, now for chargeable lifetime transfer, the gift is coming from the donor first to the donee, and the donee happens to be the trust, who will have the custody of the gift first. And later, these gifts will leave the trust and go to the beneficiary. Okay, so I need you to understand that bit. So the trust will first have the custody of the gift, after which the gift will go to the beneficiary. Okay, so anytime you say the word trust in an inheritance tax question, just know that that gift is something that has to do with a CLT, chargeable lifetime transfer. Okay, so we have to solve the question, and in solving the question, first thing first, I love to have things done this way. So I'm going to create 3 columns. So the columns will be, I'm going to have the gross, and I'm going to have the inheritance tax, and somewhere here I'm going to have the net. So you have 3 columns. So what do you put down as the net? Well, what you are going to put down as the net is these bits that says £800,000 after deducting all available exemptions. So a value after deducting all available exemption, which is 800,000. So that 800,000 comes in. Okay, now the other thing we have to do is to determine the amount of inheritance tax which is going to be paid to HMRC. So how do we determine this? So let's do that. So it's going to be inheritance tax payable. Okay. Anytime you have to calculate the amount of inheritance tax payable, you must first ask yourself, how much nil rate band, or how much nil rate band would this gift enjoy? So this is where you need to go back from the date of the gift. You go back 7 years down the line and see if the donor made any gift before the date given to us in the question. So remember, the date given to us in the question is 14th November 2023. From that date, if you go back 7 years, would you find any gifts made by this donor? And the answer is no. So what that translates into is that the first 325,000 of this 800,000 is not going to give rise to inheritance tax. So we call that new rate band. So the new rate band is going to be 325,000. Okay, and the rate is going to be 0, so it will not give rise to any inheritance tax. All right, so there's something you're going to do for me now. The value of the gift itself, which is 800,000. Now let's put it down here. And can I ask you to help me deduct that's 325,000 from 800,000. So if you say 800,000 and you deduct 325,000, what would you have? Is that looking like 475,000? So 475,000. Okay, thank you. So it is this 475,000 that will give rise to inheritance tax. So at what rate will this be? Since we've been told in the question that the donor, that's Jane, paid the lifetime inheritance tax. So let's go back to the question. So here it says Jane, that's the donor. Jane paid the inheritance tax arising from this gift. So the donor paid the inheritance tax. So it means we need to gross up. It also means that the rate of tax that we're going to use during lifetime of the donor is going to be 25%. So 25%, here we have. Okay, now some textbook writers might have it as 20 divided by 80, and it's something that comes it comes to that 25%. Okay, so what do? We'll find 25% of that. So you say 475,000 multiplied by 0.25. So what do we have? So that is 118,750. So the amount of inheritance tax payable during lifetime is 118,750. So what do you do now on the day of the exam? So you come in and you drop in this 118, so 118,750. Please don't put a comma, just leave it like this. All right, so let's go back to the 3 columns. So I have the amount of inheritance tax to be 118,750. So what I'm going to do now is to add this 118,750. I'm going to add it to the net, which is 800,000. And that gives us 918. So this is 918,750. Okay, so what can the examiner ask us to do if we have a question like this? The examiner could ask us to calculate the amount of inheritance tax payable, which is what this question is asking us, and the value you are to get is going to be this 118,750. Another requirement, still talking about the same question, could be determine the gross amount. So in that case, the examiner will be looking for this 918,750. So please take note of that. Your requirements could be the inheritance tax payable during the lifetime of the donor. And another requirement might be asking you to determine the gross amount, which is 918,750. So the more reason for you to get the requirement of the question right. So the requirement of the question is not talking about the gross amount. Instead, it is the inheritance tax payable. And there you have it, 118,750. Job done. Moving on. We have the second question. And for the second question, let's say that. So we have this, which is question number 9 here. Remember this ACCA question. So I'm going to copy this as well and take it to where I'll be having the flexibility of dissecting it very well. So here you are. So we have it here. And can I just give myself some more space here? So just need to create some more lines for myself. So here we are now. We have to solve this question. So the requirement again, it's saying that for each of the gifts listed below, click in the box to indicate whether the gift will be exempt or not exempt from inheritance tax under the small gift exemption. So small gift exemption is what this particular question is testing. So let's go to the notes on small gift exemption. So I have it here. Gifts of up to £250 per donee. So you know what I mean by a donee. Per donee in a tax year. For instance, the tax year 2023, 2024 qualify for the small gift exemption and are completely exempt from inheritance tax, IHT. However, if the total value of gift to a single donee in a tax year exceeds £250, the entire amount loses the small gift exemption. Instead, the gift will be classified as either a potentially exempt transfer, PET, if given to an individual, or a chargeable lifetime transfer, CLT, if given to a trust. Okay, so we want to know whether the gifts to Alfred of £400 in the tax year 2023-2024 will be exempt under small gift exemption. And we have another individual, Minnie, who first received 140 from the donor, and later a further £280 was made to the same donee. That's Minnie. Okay, and we have the third person, Winifred, who received from the donor £175. So what the examiner will want us to do now is to click exempt or not exempt for each of these gifts. Okay, so what that means is, imagine the £400 gift made to Alfred is not exempt. So you come here and click it. If not, if it's exempt, you come in and say it is exempt. Okay, good. So the rule says, so you need to remember the rule of £250. You must remember that. So the way I love to do this is this. So I'm going to have their names put down. So there are three individuals here. So we have Alfred, and then we have Minnie. So we have Minnie. We also have Winifred. So we have Winifred. So these are three individuals. So we want to put down the total amount that each one of them received in the tax year 2023 2024. So for Alfred received £400, and for Minnie first received 140, later also received 280. Okay, now what about Winifred? Winifred received 175. So for Winifred, 175. Good. So what do you do at this point? Please don't see this as a waste of time. I need you to do this, please. So you need to add up what each one of them must have received as the total in this particular tax year. So for Alfred, the total is 400. For Minnie, would you agree if you had 140 and 280 together? I'm sure my grandmother can do this. This is coming to 420. Okay, so why this is going to be 175. So here we are. Is this total that we're interested in? Okay, so we'll go through this one by one. Bearing in mind the cap, which is £250. So for Alfred, Alfred received a total of £400. So that means this is already above the threshold of 250. So it means this is not exempt. How about Minnie? I hope you are not being tempted to look at this 140 in isolation. Okay, so if you are looking at that 140 in isolation, you might go wrong. So what you need to do is to check out the total received by Minnie. So since the total received by Minnie is more than 250, because you can see the total there to be 420. So this is not exempt. Okay, so that tells you now that the 140 is not exempt, the 280 is not exempt. Why? Because the total is more than 250. Good. What about our friend Winifred? Well, the total that Winifred received is 175. So this is exempt. Okay, and this is how to apply the rule of £250. So here we can go back to the question and say the £400 to Alfred is not exempt. The 140 to Minnie, because the total received by Minnie is 420, so we say this is not exempt. The further £280 received by the same Minnie is not exempt. Why? Because the total received by Minnie in the tax year, everything came to 420 pounds. So what about Winifred? For our friend Winifred, as you can see, the total received by Winifred is 175. So this is exempt. And with this, you have your 2 marks. Okay. So please, all of this will be driven by the tax rules. So you sure have to get the tax rules right. So I always tell my my students that do not look at taxation the same way you look at mathematics. So if you take this to be mathematics, then there's a problem, and you must have learnt the rules before you step into the exam room. So you can't get to the exam room and start learning in the exam room. It will be too late at that time. All right, so we've come to the end of the solution regarding these two questions. So we have the first one that happens to be question 8 on the website of ACCA, where I picked the questions from. But for us, it's question number 1. Then the second one is question number 9. So if you need further explanations, clarifications, please do well to comment in the comments section. So you could also email me, or you probably want to WhatsApp me. So do well to leave your comments in the comment section. Yes. I think with this, we can put the class to a close, and I'm hoping you subscribe and give this video a follow, so that in my next video you be among the first set of people that will see my next video or videos, as the case may be. So again, my name is Ayorinde Temitope. You can WhatsApp me using the WhatsApp number +234 3385 1555, and the email address. The address is ayorinde5097 at gmail.com. Okay, so at this point, I need to thank you for your time, and remember, you can always reach out to me. Thank you so much once again. I'll see you some other time. Bye.